For over 70 years, you've got this one book that some traders swear by, they call it their Bible, while others dismiss it as nothing more than financial astrology. It's built on a radical idea, that the stock market's movements aren't random at all. We're going to dive into the legendary and very controversial technical analysis of stock trends.
So what's at the heart of all this debate? It's really one big question. Are all those wiggles and jiggles you see on a stock chart just random noise? Or are they trying to tell us something? Is there actually a language hidden inside all that chaos? And if so, can we learn to speak it? That's the huge question this book dares to answer.
All right, to really get a handle on this book's impact, we have to go back to the very beginning. Because this wasn't just another guide to investing. For its time, this was a totally revolutionary idea. Okay, so picture this. It's 1948. Building on the groundwork laid by Charles Dow way back in the 1800s, two guys, Robert Edwards and John Magee, did something that changed the game. They took Dow's theories and built a whole comprehensive system for reading the market. And the proof is in the pudding. The book is now in its 11th edition. That longevity alone tells you something pretty powerful about their ideas.
So what was this big idea exactly? It's this. A stock chart isn't just a boring series of prices. No, it's a visual record of human psychology. It's the collective fingerprint of every trader's fear, greed, and hope. Every peak, every valley, it's all right there, telling the story of the constant battle between buyers and sellers.
Now, for the people who really subscribe to this idea, this book isn't just a useful tool, it's absolutely essential. So let's take a look at why its followers hold it in such high regard.
And when they call it the Bible, they are not exaggerating. For believers, this is the foundational text. It's a complete education in not just what patterns to look for in a chart, but why those patterns are even happening in the first place.
And this is where the book really comes alive. It's where abstract charts get turned into very human stories. One of the most famous patterns is the head and shoulders. To a believer, it's not just a random shape, it's a specific signal. It's the chart screaming that a powerful story is unfolding, the story of a trend that's on its last legs.
Think of it like a party. The left shoulder, that's the early buzz, when people are showing up and things are getting exciting. The head, that's the peak of the party. Total frenzy, everyone's jumping in, pushing things to an all-time high. But then, you get the right shoulder. The energy's fading, the music's getting quieter, the price tries to rally, but it just can't get back to that peak. For a trader, that's the signal. The party's over, and it's probably time to head for the door. This all builds on the older Dow theory, which sees the market like a giant ocean. You've got your primary trend. That's the main tide, and it can last for years. Then you have secondary trends. Those are the waves moving against the tide. And finally, you have the minor trends, just the little daily ripples on the surface. The whole point is to figure out, are you swimming with the tide, or are you about to get crushed by a wave?
But, and this is a big but, for every believer, you're going to find a skeptic. And the arguments against technical analysis are every bit as passionate. So let's flip the coin and hear the other side of the story. Okay, so here's the core of the fight, right in a nutshell. Believers see it as an art form, a skill you develop based on timeless human behavior. But the skeptics, they fire right back. They call it a pseudoscience, basically the same as reading tea leaves or checking your horoscope, with absolutely no real proof that it actually works. This quote just perfectly captures how skeptics feel. The argument is that the followers are just operating on faith. They're seeing patterns in what is actually random noise simply because they want to see them, not because there's any hard, verifiable proof that they're real. And here is what the skeptics would call their knockout punch. They'll ask you a simple question. Name one billionaire who got there using only technical analysis. Right? You can name fundamental investors like Warren Buffett all day long. But critics argue that when it comes to pure chart readers, the number is a big, fat zero. For them, the proof is in the pudding. And in this case, the pudding is empty. And putting the whole philosophical debate aside, there are some pretty practical complaints about the book itself. A lot of people who try to read it today find it incredibly dense. The language is super formal, very academic. It's from a different time. And one of the most frustrating things is that instead of just showing you a clear chart, it'll often try to explain it with a giant wall of text.
So this all leads us to the biggest question of all for anyone thinking about reading this today. Is a book written way back in 1948 still useful?
I mean, just think about it for a second. The world of 1948 had no internet, no high-frequency trading, and definitely no armies of computer algorithms moving the market faster than a human can even think. So how on earth can principles from that era possibly apply to the crazy fast digital markets we live in now?
And that debate is still raging. The case for its relevance is pretty simple. Technology changes, but human nature doesn't. The same fear and greed that drove markets 70 years ago are still hardwired into our DNA today. But the case against says, hold on a minute, humans aren't driving the bus anymore. The market is a game played by machines, and those old human-driven patterns might just be obsolete.
So after all of this, what's the verdict? What should we really take away from this? Is this book a treasure map, or is it just a historical artifact? Let's try to get some real perspective here.
You know, maybe the best way to understand this book's real value is with an analogy. Reading it isn't about finding some magic formula for getting rich. It's more like climbing a mountain. It's tough, it's dense, it's a real challenge, but the perspective you get on how markets behave once you get to the top, that's the real reward. And look, love it or hate it, its legacy is just undeniable. The book literally helped write the dictionary for modern trading. Common terms you hear all the time like support, that price floor that seems to hold up a stock, and resistance, that ceiling it struggles to break through. That's all part of the framework Edwards and Magee helped build for all of us.
So what's the final verdict? Well, one reader put it really wisely. This book is not going to stop you from ever losing money. It's not a crystal ball, but what it will do is give you a deep historical framework for understanding trends and the human behavior that creates them. It's all about gaining insight, not about being right 100% of the time.
And maybe that's the ultimate takeaway here. The simple fact that we are still talking about this book, still debating it so passionately after all these decades, maybe that tells us something really profound. It speaks to our deep human desire to find patterns, to create a narrative, and to find some kind of order in the seemingly total chaos of the financial markets, and maybe in the world itself.